Hello and welcome, everyone. We are so appreciative that you're coming to hang out with us today for tax strategies and secrets for our healthcare professionals. We here at Trusted are chock full of nurses, so we get it. We understand tax season is scary. Tax season is a lot, so we want to make sure that we are just bringing to you resources and tips and tricks for you to pay less, do less, and just have more. Okay, we're in abundant season this year. So if you are not familiar with Trusted, Trusted is actually the place for the modern nurse. Not only do we place nurses in amazing travel assignments around the country, but we also have a ton of resources, events like these, in-person events. So catch us near us in a city near you, along with blogs, podcasts, interviews, and just a whole bunch of things for you guys. But as I said, today's event is going to be jam-packed, and we'll have a Q&A section, so you guys don't fret. You guys will get your questions answered. We'll answer each and every one of them. We are recording this event, and we will send out the slides later once we're wrapped and everything like that in an email. And again, I'll send those resources as well. And you'll have Shelby's information too, which is most important. For those of you all who don't know, I am Britt. I am the community manager here. I have been a nurse for 9 years, and I was a traveler for 5. So now I try to help everyone just with education and events and things like that. So we are super, super, super happy for you guys to be here. And I'll go over a little bit of the platform because I know that some people, it'll be their first time. So if you toggle over where the general section is, that's where everybody's saying that messaging and things like that, if they can hear or not hear. But then we also have a Q&A section, so if you'll toggle to that, that's where you can actually put your questions if you have any throughout the presentation. If you like a question that someone else has asked, you can actually upvote it so you don't have to type it all over again, and we'll get to each and every one, so do not worry. And then also, if you guys are having any trouble or issues, just DM me. I'm going to be here the entire presentation helping you guys. So if you have any side questions, feel free to DM me. And then if none of those solutions work, of you going out and coming back in to test your audio, visual, or anything like that, you can press that !help button at the top. And there are Bevy support people waiting to help you there. Without further ado, though, now that we kind of got all the non-fun things out the way, we are so happy to have Shelby Green here today with us. We've had him here before, and he was just a wealth of knowledge, so we had him back again, and he's going to help us today. So, Shelby, hello, hello.
Hi, how you guys doing? I appreciate you having me here again. Also, I'm curious if this allows me to share screen.
No, I'm sharing mine. Do you need you can just tell me when you want to move to the next slide. Do you need another slide though?
I was just gonna go over some math stuff,
Oh,
boring
okay.
stuff, but
Yeah, I can see.
it could,
I can stop sharing and then see if you can try that.
yeah, that could work because yeah. Let's see what happens if I click this.
Sometimes you might have to like update your browser. Everybody has to update their browser, guys. It's not just you.
Right. Okay, so let's see if they can see. Let me know if you can see mine.
Okay.
Although right now it's probably just gonna be a screen, just gonna be me and you. So right now, but
Oh,
let's say I
okay.
go here. Can you see this?
Yeah. I can see it.
Okay, awesome. All right. So just to get started for you guys, want to start here. I'm guessing, does it also show my face too?
Yep.
Okay. All right. Just cool. Just making sure. So want to get you guys some information just about background, about me, about my company that I'm with currently, and then we'll jump right in because what I've learned about taxes is the more you know, the less you pay. Right. And so I want to make sure I give you guys the proper education. I built my entire business on the principles of education. And so that's exactly what my goal is here is just to educate you guys and give you guys some practical things, but also some things you can apply literally tomorrow. Okay. So a lot of the things I'm going to go over today, you can literally do. It's not just information to take, it's things you do because information is not going to lower your tax liability. It's going to be the things that you take from this that you actually go ahead and do for yourselves. Right. So I'm with a company called Ashford Advisors. I used to be, and I technically still am the CEO and owner of a company, SAG Financial Group. So if you've heard of that, I know I see a lot of names here that I recognize. If you've heard of me, I've been doing this for about 11 years. I built my whole entire business off working with nurses. So Ashford Advisors, what we do is comprehensive financial planning. So I myself am not like an accountant or CPA. I just know a lot about taxes because I'm a financial licensed professional. But we handle things that cover things like retirement, debt reduction and management, budgeting, tax strategies, insurance, risk management. Pretty much you name it, we probably do it in the financial realm. So we handle a lot. Also, we don't charge nurses any fees. So you'll see here, I've been working with nurses, NPs, CRNAs, PAs, have my degree in finance. I guess a little bit of recognition that I'll move on. So this is just fun stuff I like to do. Tennis, basketball, spades. I'm also a Latin dancer. No questions about that at the moment. You can hold those off till later. But I've been in Shout Out Atlanta, Voyage Atlanta, Yahoo Finance, American Daily Post, The Money Is Show with Andrew Cordell. This was actually a pretty big deal just because all of my idols were actually on this show. So the fact that I got to be on it was pretty cool. I've been in Leaders Club for 3 years in a row, Executive Club, and the $1 Million Roundtable. So I do know what I'm talking about in these realms of finance. So I guess enough about me. I wanted to taxes. So just to start, I want to tell you guys and show you guys exactly how you can calculate taxes. Because I think a lot of people, at least from my experience, especially travel nurses who are on 1099s, a lot of times they don't actually know how much they're going to pay or what to expect. So I want to actually walk you guys through how you can find out exactly what you're going to owe the government. Okay. And so, Brittany, this was one of the things I wanted to do. This is why I wanted to share, was really just for this purpose here, of sharing within this. So I'm going to share with you guys. This is the actual IRS.gov website. So I put the link in the slide. She's going to send you guys the slide. Okay. And so you guys will get all that stuff. But when you come here, this is what's going to show up. It's a lot simpler than it seems. And I'm going to do just a little bit of this so you guys can see me do it, because I know some people are like, well, what's all this stuff mean, et cetera, et cetera, et cetera. So I'm going to walk you through briefly in this information just so you guys have a good understanding. I'm going to be pretty quick just because I don't want to focus all my time on this. But I just want to show you guys how you can find out how much taxes you're going to owe without guessing. Okay. So when you come here, it's going to ask you, are you single, married, filing jointly, married, filing separately, head of household, etc. For the sake of this, I'm just going to put single. Okay. You have a job that will regularly withhold income tax from your check. I'm going to put yes, because if you're 1099, you may not have a job that always has tax come out. If you plan to be a dependent or claiming dependence, you can obviously check these boxes. Or if you're blind, I guess you can check this box, technically speaking. But I'm going to click next. Here, it's going to say how many jobs we have this year where this will happen. So you can add as many jobs as you want. More than likely, if you're a nurse, you're going to select an hourly job here. Okay. If you know when this says this, you can actually go and itemize each job and it'll say like a certain duration of time. So you can do like a portion of the year, and you can select your start time and end time. So if you're at a normal contract, that's usually about 13 weeks. You can select this and go through this with all your jobs, but that's a lot of work for me right now. I'm just going to go in here and click all year just so I can give you guys an example. But if you guys have different contracts, you can click this, click the duration, and you can kind of enter information for each job. Okay. Does this take a little bit of work, a little bit of information? Yeah, it does. But at least that way you know exactly what you're going to be paying. Okay. So now I'm going to click all year. And I'm actually sharing this people because a lot of people, like 95%, I swear, it's definitely a made up percentage, but a lot of people I talk to end up in this position where they actually have no idea that this even exists. So if you guys didn't know this exists, it does. How frequently are paid? Let's just say every 2 weeks. Okay. When's your most recent pay stub? I'm going to just make up a day for now, just because I'm just doing this to show you guys how to do this. My last paycheck was a good representation. Sure. I don't know. Date 20,000. Okay. Basically saying that I make $5,000 a paycheck here. It looks like your annual income from this job is 125 grand. Is this correct? Yes or no? Okay. And so federal taxes paid, let's just say it was 0 because they're not doing this. Okay. You can enter if there's a different number. Your pay stub should actually show this if there is a number there. Okay. If you have benefits, you can say you contribute to a 401k. The reason why that's relevant here, or HSA, is because those are what's called a pre-taxed account. And we're going to go over what that means here in a second. Okay. For me, I'm going to click none of the above. And then, of course, you can have any other sources of income or estimated tax payments. Now, here I'm going to put none of the above just to make things really simple. But investment income, that's a common one. Other taxable income, this would be from other jobs. So outside of your nursing. So I've had a lot of people who might get a little side gig. Maybe they're selling literally anything, skincare or scrubs or whatever the case may be. You can click this stuff and enter how much income you're making for those specific jobs. Okay. Now I'm going to click next because that's only if you have those. I just want to keep this very simple. Okay. These are adjustments. So adjustments are things like student loan interest, educator expense. You're probably not going to qualify for educator expense. Deductions to IRAs, HSAs, penalties, such and so forth. Okay. For me, I'm just going to enter none for now, just for simplicity. Now on this screen, it's your deductions. If you don't know what a deduction is, we're going to talk about this stuff here in a bit. So don't worry too much about the deduction. We're going to go over what this means in all detail. Okay. You can do a standard deduction of $13,850. This is the standard deduction. What that basically just means is more or less, this is like the standard amount people can deduct without much or any itemization at all. Okay. So it's very easy actually to get the standard deduction. If you want to do this legally with no problems at all, you're going to have to start a business. I'm going to walk you through that and stuff of that information in a bit. So don't worry too much about this. Okay.
Shelby, there's a question. Are the wages earned the gross amount or net pay?
It's gross.
Thank
So the thing is, if your net pay, everything you're entering is gross because it's asking you what was your 401k contributions, and it's going to end up doing the net itself, if that makes sense. So it asks you how much federal taxes are coming out of your check. It asks you what contributions are coming out, what health insurance is coming out. Those things are already being asked within that paycheck in these sections that affect taxes. So you're going to enter the gross. That's a great question, though. I'm actually glad you asked. As far as the standard deduction, a lot of people do select the standard deduction. If you can't itemize above $13,850, it's actually really easy to actually write this off in your taxes. Very easy. And I'm going to explain more of what that means in a second. Okay. You also can itemize your deduction. Okay. You can itemize it. If you already paid some taxes, you can put it here. Medical and dental expenses. Remember, we just talked about that. If there's any investment interest expense, any charitable donations, this includes tithing. Okay. So if there's people, and I have a lot of people, if there's people out there who are tithing currently, I highly recommend you tithe with anything that's not cash. Okay. So a check or an online payment. The reason why is because you can deduct those tithes on your taxes, right? So you're kind of able to, give that money to charity, any charity, including church, and you can write it off on your taxes, which helps you in two ways, right? Other itemized deductions, and you can then enter an amount. Okay. So we're going to talk about how to get this higher. What are maybe some deductions you can do? We're going to talk about all that stuff. The next few pages are going to be tax credits. We're going to talk about tax credits here in a bit. And then you get results. Okay. So that's basically how you're going to work that and how you're going to do that. Okay. I guess while we're on this section, I guess I will ask if anyone has any questions about what I just went through on this section. I don't know. Let's see.
There's none that have come in just yet. They were all old questions, but if you all do have any questions, feel free to put them in there and I can float them to Shelby if you have any new ones. Oh, if you're not 1099 itemized.
If you're not 1099, then no. So the thing about it is you could. So let me explain that. That's a good question. I want to expand on that a little bit. Okay. If you're a complete W-2, the difference is the taxes are already going to be taken out. So the whole calculating the tax part, this will actually not be relevant to you because taxes are already coming out like normal most of the time. So a lot of times the 1099 contractors, though, out of their paychecks, the taxes aren't paid. So that whole thing I just went over was more so just calculating how much you're actually going to end up owing. Okay. If you're W-2, can you still start a business and have deductions? Yes. Okay. So that's perfectly something you can do. And potentially it can get you either a bigger refund, or if you're somebody on a W-2 who owes money on taxes, you'll owe less. Or maybe you went from owing to now getting a refund. Okay. So I'm going to go over all that stuff in detail here. I'm even going to do a little bit of math with you guys to make it, it's really easy math, I promise, as well. Okay, just to answer a couple other questions that are in this chat. Um, Cindy asked 2 questions. She said, how do we find an expert in our home area that has knowledge of traveling nurses? If you need a financial expert, I'm licensed in 44 states, so you can always reach out to me. Besides that, I would just maybe ask for referrals around people you have. But I'm licensed in most states, so I can help most people, right? Is there any way to avoid paying taxes legally on dividends earned from stocks? They're automatically reinvested, but overall value of my portfolio is down. Colleen, that's a great question, but the answer is no. There's no way to avoid taxes on dividends at all. Reinvesting it can help because a lot of times you won't have to actually pay on the reinvestment, but as soon as eventually you take the money out, you're still gonna have to pay taxes. So you're really just gonna delay the inevitable. Okay, but there's no way to avoid that. As a W-2 travel nurse, should I LLC? Cindy, if I were a travel nurse, I would. I would. And I'm going to go over that here in a bit. Okay. Back to the PowerPoint, right? So here it says,
Oh, Shelby, there are a few more in the chat that were asked as well. I can float them to you. It starts with Carrie.
Yeah,
We already answered
person, can you
Heather's, but
still
yeah,
use the
Carrie.
standard? Yeah. Okay. So I'll start with Carrie's then. Okay. Carrie, the answer is no, not legally. So you can do the standard deduction, but you're going to have to start an LLC. Okay. Starting an LLC is not that hard. I can actually do LLCs, for example. I can build LLCs for clients in 30 to 45 minutes. If you don't know what to do, it might take a little bit longer. Yes. But they're not hard. I know a lot of people, if they've never built one, they think it's this whole long process. It is extremely simple to build a business. Very, very easy. So, an hourly person, if you're W-2 and hourly and you want to deduct, just start a business. We're going to talk more about that whole business thing here in a second. Okay. Marissa, regarding charity donation, do you estimate values if they donate furniture, clothing? Marissa, unfortunately, a lot of times they don't allow that deduction. So let's say that I donate all my clothing to Goodwill. If I donate all my clothing to Goodwill, a lot of times what's happening is that I'm not actually able to write it off because it's too hard of a number to calculate. So, is there a way to potentially do that? Potentially, but most of the time the answer is going to be no. You wouldn't estimate those values. There are certain things in which you could, but definitely not the usual things. It'd be big, really big things that would come from like a business. If you donate a business or something like that, really big things you can sometimes do, but not usually the average things. How does it work if you spend more that 1 year in a certain area? Can your stipends be taxed? If you spend more that 1 year in a certain area,
Like
Rachel, I don't.
travel nurse in the same area. Like if she stays in Oakland for a full year. Like regarding travel nursing, if she stays
So
in the area.
Okay, so it sounds like, if I'm correct, it sounds like she's asking if she picks up contracts multiple in the same place versus going different areas.
Mm-hmm.
Okay.
Or extend
that won't really make much of a difference. Yeah, that shouldn't really make much of a difference. Okay. Yeah, it shouldn't really make much of a difference at all. Mm-mm. I read something about putting it into a money market. Money market is also taxed, Colleen. Even the earnings in a money market are also taxed. I think that a lot of times the amount of money that people earn in those accounts is so low that they feel it's neglectable. And if it is, yeah, I know. She said, "I'll darn." I know, but it's one of those things where it's usually such a low number for most people what they're making in those accounts that it's like the government's not going to audit you because you made $50 in a money market account. But this year, for example, be aware, guys, because these rates are like over 3% for money markets and high yield savings accounts. And if you have a lot of money in that account, you could potentially earn hundreds of dollars. and you do have to report that income. Okay. All right. Cool. I think that's all of them. All right. I'll check back these after the next slide. Okay. So this is just a suggestion for you guys. Here, I say do at least 25% of your paycheck. If you have 1099 contracts that's not charging you taxes, put at least 25% away for taxes only. Do not spend that money, please. Now, if this 25% is just a basic number, if you didn't want to use this calculator, you saw I got through this calculator in like 10 minutes. And that was with me explaining it, right? If I really wanted to rush, I could do this in probably less than that. So I'd recommend utilizing this calculator. This whole link will be on the slides that she's going to send you guys. But if you don't feel like using this and you just want to do like a base number, you could just do 25% if you feel like it. That's usually a pretty good average. Okay. Now I want to explain how tax deductions work themselves. Okay. So I found a lot of people aren't actually sure of this. They hear it and they think that this is like free money. So I'm going to share with you guys, I guess, just quick math, and that's why I wanted to use this word. So let's say you make $100,000, guys. This is income. This is taxable income. Okay. This is gross. You make $100,000, and let's say, I just want to round this up for easy math. You have $14,000 you've deducted because of the standard deduction. Okay. So let's say at 100,000, you would have been taxed all 100,000. For easy math, I'm going to say 20%. That would have been $20,000 in taxes paid. Right? But in this other example, we used the deduction of 14,000. I keep putting 800 because that technically is the correct number, 13,800. Right? You're going to minus this from your total taxable income, which is $86,000, right? 100,000 minus 14, 86,000. Now, let's say that one, it bumps you down a tax bracket. So maybe you're only paying 19% in taxes, but you're only paying taxes now on 86,000, not the full 100,000, right? No idea what 19% of 86,000 is, no matter how good I am with math. So I'm going to figure out what that is. $16,340. So even if I use the standard deduction, guys, I want you to see that I saved almost $4,000 just like that, without even doing any itemizations, no receipts, no nothing difficult. The simplicity of this, everyone should be doing it. And if $4,000 doesn't matter to you, please send it to my Venmo, PayPal, Cash App, etc. I'll take the donation. But this should matter to you guys. This is good money, and there's nothing you're really doing for it except literally just applying the knowledge that we're going to go over today. This is easy money. Easy money. If your refund would have been $4,000, now it's $8,000 because you saved $4,000 in taxes. Okay. So you guys are earning an extra $4,000 literally just with the standard deduction. Imagine if you had itemized deductions at a higher amount. Okay. So let's just say you were able to find $40,000 of write-offs. Now your taxable income is only $60,000. Okay. Okay. Now you pay taxes only on the 60,000, and you've probably bumped yourself down another tax bracket. Now you're paying a different percentage. So hopefully that makes sense to you guys, because this is literally the secret. If you guys are wondering how these big companies or people who are making more money are paying less in taxes, well, one answer is simple: more deductions. Okay. Next thing I want to go over really quickly, and of course I will get to questions here in a second, if there are any, but is pre-tax situations. These are going to be things like your traditional 401ks, right? And HSAs and things like that. I don't know why it keeps autocorrecting me to has. So here are your accounts. So let's just say you make $100,000 and just in case you guys didn't know this, let's say that you decided to do a 5% contribution. What this means is they're taking 5,000 bucks of your gross income. Because 5% of 100 grand is $5,000. So by putting $5,000 into your 401k, your taxable income has dropped to $95,000. Okay. If you didn't know this, now you do. Okay. What this also though means is that because this is a pre-tax account, the 401k, you have to pay taxes at some point because the government wants their money. Right? Anytime you have a bunch of money, the government gets jealous every time you have it. They want some. They stick their hand out and say, oh, well, what about me? You know, you've been hooking me up for years. Don't stop now. Right? You have to pay this tax eventually. So you pay it when you take the money out of the 401k. Okay. So usually this happens when you retire, or for those who may have taken money out early, you probably ended up paying taxes as well. Okay. So here's the information about deductions and what they mean, pre-tax accounts and what they do. What this means is after-tax accounts, things like that money market account, high yield savings accounts, your Roth IRA, municipal bonds, annuities, etc. Well, you already paid taxes on that money. So you are contributing net income into those accounts. Right? So if your net income ends up being 90 or 100,000, let's just say, for net, not gross anymore, and you contribute $5,000, you're still taxed at 100 grand. Okay. However, because you already paid taxes, let me scroll down. Because you paid taxes already, you do not have to pay taxes again on the money. Okay. So pre-taxed, you contribute before you pay taxes on the money, means you pay it later because you always have to pay taxes at some point. Okay. Then after tax, you're contributing after you've already paid taxes. You don't have to pay taxes again, usually in case because you already paid taxes. Now, the only difference on this are two things. One, investment money. Let's say I put my money into the stock market or a mutual fund, which is still the stock market, but any other account like this, right? There's something called capital gains tax, which is basically investment tax, more or less. Only way to avoid these are in these types of accounts like IRAs, 401ks, in specific tax favorable accounts. So these accounts are after tax. However, you still have to pay taxes on the earnings. So if you made, let's say you put in $10,000 into the market. If I'm giving way too much information, if this is too confusing, just let me know in the comments. Because I could ramble on about this stuff for a long time, but I'm trying to, this stuff can be complicated, but I'm trying to make it as easy as possible for anybody. Let's say you put $10,000 into the market, right? And then your account grew to $15,000. Well, that 5,000 bucks is earned money. Well, guess who hasn't had their share on that earned money? The government. You have to pay taxes now on this money when you take it out of that investment. While it's in the investment, you don't pay taxes on it. But as soon as you want to put that into your Wells Fargo, Chase, Bank of America account, you will pay taxes on whatever that amount of money is. Okay. All right. Next thing I wanted to go over before I go over questions is tax credits, which is a little different than deductions. I technically know what the slides are, and the slides do go over this, so I'm just kind of going over it while I'm here because I know I need this Word document for it. Tax credit is basically literal free money. Okay. So what this does is if I make, let me scroll down some more so you guys can see. If I make 100K gross and my taxes owed end up being 20K, I have 5K of tax credits. A good example of a common tax credit are child tax credits, right? So those of you with children, this is very common. Okay. There's a bunch of other tax credits that we could get into. My actual taxes earned are going to be minus the 5K. So I only owe $15,000 in taxes. How that's different is this tax credit has nothing to do with your income. It's all about the tax money. Okay. So if you were going to get, instead of owing taxes, if you were going to get a refund of 5K, you add another 5K to that because of the tax credit, you get 10K refund. I hope that makes sense. The tax credits are awesome. Phenomenal. They're just more difficult to get. All right. I know I went over a lot of stuff. I want to just hold on for some questions. So I'm going to look at the question list really quickly and see what we got here.
We have to start way back up here to Rachel's, I think is where, yeah,
Heidi?
Rochelle's maybe. How does it work if you spend more than, oh no, we did that one. Sorry. There was,
I think we're on Heidi
yeah,
Burnett.
you got it. Okay.
Yeah. Just to clarify, if we only work with W-2s, we cannot use the standard deduction. Heidi, just to answer the question, if you want to use the standard deduction, you just have to start a business, an LLC. That's all. But if you don't, then you do not want to use the standard deduction. So hopefully that helps. Okay. Megan said, is it better to do Roth or pre-tax retirement? Now, this is going to take me this will take me a few minutes to explain the answer to that question. Brittany, do you want me to get into that, or should we wait?
Yeah, you can just go ahead, because if you guys could put them in the Q&A, that would be much easier than the general. So just go ahead and do it, since so I can mark it off.
Okay. All right. So I'm going to go over this, guys, with you. I'm going to go over this information with you guys. Okay. Now remember, I said this is going to take a few minutes to explain. So please bear with me. This is not an easy question, but you guys will come up with the answer as I go over this with you guys. Okay. My job isn't just to tell you the answer. I want to educate you on why. I hope that's okay, guys. I'm not the guy who just like, here's what to do. I'm like, here's what to do and why. Hopefully that's helpful. Okay. So really, Megan, your answer is, should I put my money, or what's better between a pre-taxed and after-tax account? We're not going to get into specific types of accounts like IRAs, 401ks. To me, there's better accounts than that exist as well. So I don't want to get into too much of that kind of stuff specifically, but I want to answer your question about the pre-tax versus after-tax account. Okay. Now, first, I just want to note, usually the most common pre-tax accounts are 401k, and the most common after-tax accounts usually going to be a Roth IRA. Those are the most common. So you're going to see people say those accounts all the time, just because they're the most common accounts. Okay. Now, common doesn't make anything good. Just want to put that out there for people. Okay. But that's a whole different conversation. Now, pre-tax account, we talked about what that is, and after-tax, we talked about what that is. But to know which one is better, it depends on tax rates. So bear with me while I explain this to you guys, just because, like I said, this is not a simple thing, but I'm going to make it really easy for you guys. It just takes a while for me to get it out. Okay. So, and then we'll go over a little bit more detail afterwards. So answer is, it depends on tax rates. So I don't know if you guys knew this. I'm just going to give you guys the answers just because of time. In 2020 or today, does not matter the year, the tax rates are the same. The highest income earner today pays 37% in taxes. Okay. You guys can all think about a number. What do you guys think the tax rates were in the 80s? You don't have to even write it down. Think of a number in your mind of what you think the tax rates are. Let me give you 3 seconds. Okay. Whatever answer it is, see if it matches the correct answer of 70%. Okay. You'd probably be surprised that your answer was probably 15 to 25%, because most people think it was lower. What they don't realize, the tax rates right now are very low. In 1955, it was 90%. This is for the highest income earners, of course. But if they pay more taxes, we still pay more taxes. Even though we're not paying 90%, we're still paying more. 1945, it was 94%. 1929, 65%. And 1912 is around 15%. If you don't believe these numbers, you can fact check me on Google. Not that Google has all the information, but if they have the same information I'm saying, we have 2 reference points now, right? But nonetheless, this information is factual. This is the highest income earner tax rate. So every single time, and I share this with you guys so you guys can see how drastically taxes can change in just a couple decades, right? And I even share this with all my clients as well, just because this is that important, right? And I say, because I also see some clients who are here, and they probably have seen this before. They could probably answer this for me. But the thing is you really want to see this. Every single time that taxes have a drastic change, there's a big economic impact going on in the world. So let's look at this, right? This was the Great Depression. Around this time, Great Depression. And what also happened? Well, they tried to remedy the Great Depression. And I don't know if you guys know how they tried to remedy it, but they tried to remedy it by starting something called debt. This is really when they started debt, and that became like a prominent thing, right? So you're struggling because of the Great Depression, and they say, okay, well, hey, I'm a rich person. Let me lend you money. You need $1,000? Okay, I'll lend that to you. Start of debt. But I want you to give me $2,000 back. You guys see the problem here? It would keep the rich rich and the poor poor, right? And so a lot of people kept defaulting on these loans, and so government had to step in. Well, what did this mean? A bunch of government spending increased taxes big time. Okay. Also, this is not that far off of World War I either, where a bunch of money was used. Then here we have the biggest war the US has ever had. So nonetheless, taxes skyrocketed with all the military and government spending. You guys are going to start seeing a trend as the government spends more money, we pay more in taxes. It's just how it works. They're recouping the money, right? It's either that or they print more. And then you have an inflation issue like we do now, especially we did the last 2 years. Okay. Now, 1955, what was this? The baby boom era. This is when my parents were born. This is when an economic boom was happening. So taxes started dropping 85%, 80%, 78, 77, 75. And in the late 70s, a group of rich people got together and they said, I'm sick of paying these high taxes. How can we pay less? So what they did was they said, okay, let's create an account that we don't have to pay taxes in. They created what's called the pre-tax account, or technically it's called what's called a qualified account. If you ever hear of a qualified account, it's qualified for tax deductions. That's what that means. So they created the pre-taxed account. And so what does this mean? This means that everybody who had this account put their money into pre-taxed accounts to avoid the taxes. Let's say they worked for 40 years from 1980 to 1920 or to 2020. They ended up retiring today. They pay 37% in taxes. So they saved 33% in taxes, if you guys can see that. So if I had $1 million, that means I saved 330 grand. That's a big deal. And $1 million is not a lot of money in retirement. That's pretty average. Okay. So that's a big deal. Now, if you guys wonder why your employers give a employer match, well, businesses cannot contribute to this 401k, and they want their tax write-off too. So every single dollar that your employer matches, they get to deduct on their taxes. This is why they give you an employer match. It's not just to attract you there. It sounds attractive to you, but this is actually a benefit to them. Okay. And if you're a business owner watching this right now, thinking, oh man, he's telling my secrets, I apologize. I tell the truth. This is just how it works. But what I want you guys to really think about, and this comes now to answering your question. I'm sorry it took me so long to get here, but like I said, I love education. In 2020, what happened? You can think. COVID. You guys all know about this way too well. All of you. Right? You guys were the heroes during this. I say during this as if it's gone. It's not gone, but just less popular, right? So what happened though in 2020 with COVID? Well, there was $4 trillion of stimulus checks given away. You guys remember that? Over $2 trillion of SBA loans. So have you ever heard of like the PPP or the EIDL? That was money given from the government. And over $1 trillion for the economic relief program. Is that program? Well, your student loans are still on forbearance, aren't they? That's money that the government's paying in interest that you're not going to be paying, at least temporarily. Unemployment checks went up. Crisis pay. You guys remember crisis pay? Some of you may have took advantage of that, but there was actually travel contracts paying 20, 30 grand a month for crisis pay. All this stuff was paid, through what? A lot of it was paid through FEMA. And so all this money, over $7 trillion, the government says, hey guys, you don't have to pay this money back. right? I've been living on this planet for over 30 years. Don't know how old you guys are, but I can say the government hasn't given me free money. So why would they start today? I want you guys to think about it. So more than likely, by the time I want my retirement money, let's say 2040, my guess is taxes will probably be higher. And what does this mean to answering the question? I'm going to tell you because I'm sure you're like, get to the answer, Shelby. Um, so I'm going to answer that. When tax rates are high, you want to avoid the taxes. So you put your money into pre-taxed accounts, right? Because you want to avoid it. You want to pay it later. When tax rates are low, you want to pay the taxes while they're low, right? So you want to put your money into after tax accounts because you don't want to have to worry about the risk of paying more in the future. Hopefully that makes sense. And so that's the answer to the question. It depends, but it depends on tax rates. So right now, it's better to put money into an after tax account because taxes are low. Okay. So hopefully that helps you guys with that answer. In the chat box, if that helped, please say something. Anything, or if you have a question about what I just said, I know I just said a lot of information. So, I know it's a lot to deal with, but it's one of those situations where it's not an easy answer as like A plus B equals C. It's let me give you guys the background and information. That way you guys know the answers. There's always a why and a how. All right, I'm gonna go over the rest of these questions. So Megan's gonna do. Oh, we did that. Anna Braxton. Oh, hey Anna. What about a backdoor? Is that still pre-tax or post? Some of us won't qualify to contribute because we make over the limit. Well, basically what you're doing with a backdoor, if you're making too much money to contribute directly to a Roth or that type of account, all you're doing is saying, okay, I'm going to put it into a pre-taxed account and then convert it over or roll it over into the Roth. Okay, that's it. So it's still going to be an after-tax account. Okay, because you're rolling it over to the after-tax account. All that does, that account is just going to get rid of the income limits. Okay. All right. Marlena says she can't hear, but I guess nothing I can really do anything with that. Carla said, so throw all your money in Roth. Carla, I didn't say anything about a Roth. I just said after tax accounts. So do keep in mind that there's a lot of other after tax accounts besides a Roth. Now, there's two main concerns with Roth. One, you can only put about $6,000, or I think now it's $6,500 a year in a Roth. So if you make 120 grand a year, putting $6,000 away is not going to make you guys wealthy if that's what you're looking for, at all. So just keep in mind, it's not a bad account, but it's very restrictive, right? Two, if you already have a 401k, you can't really touch that money without a penalty till you're 60. So having also on top of your 401k a bunch of these IRAs, you also can't touch those till you're 60. So in my opinion, if you're okay with all of your retirement accounts being restricted till 60, then by all means do that. But just keep in mind, I like some of my accounts accessible before 60. That's just me. So it depends on the person. But my recommendation to answer your question, Carla, is throw money into after tax accounts. Okay. Heather says we should just wait around retirement age to when the tax rate is lower to take out most of our money and take it out of the Roth whenever after retirement. Heather, it doesn't matter when you take it out of the Roth for tax reasons because you've already paid the taxes. So it's going to end up being the same amount. You're not going to pay taxes on that money because you've already done that. Okay. In retirement age, tax rate more than likely will not be lower if your retirement age is in the next 10, 20 years. Okay. Other after-tax options. I'm technically not, because of my license, I'm not legally allowed to give advice of where to put the money in a public setting. So I know that's disappointing. Sorry, guys. But feel free. Like I said, I work with people. I don't charge any fees. Feel free to reach out to me. I'll give all my contact information at the end. And I can actually give you personal one-on-one advice based on your section or your situation. And I can actually customize an account for you that's after tax. So I can help you guys out, but I can't, just because of my license and the way that the regulations work. If I say one advice to you, everybody might follow it. So I can't really give advice on where to put it, but I can say after tax accounts. Okay. But yeah, Marissa, Heather, I see you guys answering, Jennifer, those questions. Just reach out to me one-on-one. I'd be more than happy to answer it for you. Okay.
We have a ton more questions in the Q&A too.
Yeah, I'll answer all those. Okay, thank you. How much do you charge tax return, Marissa? I don't file taxes for anybody. I have an accountant on my team, or you can use an accountant local to you. I don't actually handle the taxes. I do tax strategies. So tax strategies is basically how can you pay less, whereas accountant or someone who files taxes literally is the one doing paperwork. I hate paperwork. So I like math and I like people. So and I like money. So that's kind of like what I do. And then Brittany just put another resource for getting your tax return filed, I think. So look at that chat. She can actually do that. Or not her, but that whoever that link is goes to. Okay. Okay, let me answer some of these questions here in the Q&A section. Oh, I do see there is a lot. All right. I have one more section I wanted to cover, and we're running low on time. So I'm gonna answer these questions fast ish. So I'm just gonna answer the question. Um, and okay, we're gonna go through this. I think we're at Michelle. I don't think I've answered this question, and then the ones below, I'm going to answer them all pretty fast. Okay, guys. It says, can you share some info on the specific requirements of a tax home? Does having a permanent address count on its own, or do we need to have at least a part-time seasonal job at home as well? It feels like there's a lot of confusion between tax home and a primary residence. So, if by tax home, I assume you're talking about anything that's going to have write-offs within your house. That's what I imagine you're talking about. There's two ways you can do this if you're going to do anything to do with taxes in your home. One is an investment property. I want you guys to know before I go forward that the whole tax code was built to benefit two people: business owners and investors. You need to be at least one of those, ideally both. If you're just W 2, that's okay. But I always recommend also starting a business because that's going to make everything proper for you guys. Okay. Um, you want to do things properly. So that's, I don't know if Michelle, that answers your question, but hopefully it helps a little bit. But if you want to write off a piece of your own house that you're living in and you want to do anything with taxes on that property that you're living in, you have to have some sort of LLC or job that you can justify a home office. So if I had a virtual job, which literally I do, I could say that that's a virtual office. So this is literally the case for me. I actually have a virtual office. So I'm able to write off things like the table that my laptop is on, this chair, right? My lamp that's in the office, my bookshelf in the office. I can actually write off those type of things as expenses on my itemized deduction. Megan Whitmore, if you're W-2 and case standard deduction, how am I supposed to file? I've always used the standard deduction. I'm very confused by that. Megan, you can use the standard deduction, but you're not supposed to. Okay. A lot of people do things that they have been doing all this time. A lot of tax professionals, or usually, or a tax friend or tax family member, they'll do things like this, but it's technically not allowed if you got audited. So if you got audited, I like to prepare for the worst. And they're going to say, why'd you do a deduction if there was no reason for it? Okay. So you can definitely use standard deduction as W-2 with no business, but you're technically not supposed to. Okay. Same as Marissa, to Rachel's question. If you still have 52 weeks in any one place, understand the IRS now considers that place your tax home. You're no longer eligible for the tax-free stipends. That question, I would actually ask your tax professional that. I have an answer, but I'm not 100% sure the answer. So I would rather not answer it and be wrong. Okay. So maybe an accountant would have that. This is another one on the stipends. Aaron, married filing jointly, hard as heck to itemize to exceed standard deduction. I feel your pain. I'm gonna give you guys some information if I end up having any time. I don't know if I will. If I don't have time to go over the business and all that stuff in the itemized deductions, I have that plan today. But if we don't have time, then reach out to me one-on-one. I'd be more than happy to give you advice. Once again, not gonna charge you anything. Just shoot me an email, shoot me a call. More than happy to tell you. Daniel, can you address max contribution to 401k? It was around 22,500 last time I checked. Okay. What amount do you have to earn in capital gains the IRS required you to pay taxes on? For example, if you're less than you're required to pay taxes. That's a good. That's actually a really good question. And your name looks really cool, but I just don't want to say it in case I say it wrong. But yeah, so I'm not sure if there's actually like, and just once again, I'm not a tax professional. Um, I'm a strategist, so I'm going to answer the question with what I think. I'm not sure if there's an actual like, here's the number that they're looking for before you have to start claiming it. One thing I do know is you do have to claim it for sure over $600. Under that, I don't know. I think it just kind of goes under the radar because it's just not that much money. But I do know if it's over 600, you have to. Okay. Heidi, you can do either a 401k or Roth or both, but to help determine what's best for you depends on if you think your income will be higher than it is when you retire. A lot of people think that it's actually going to be based on today's tax rates of which one's better, not the future tax rates. Or I guess technically it would matter, but it's really going to be today's tax rates that matters where you put your money today, because you have to think what is going on today, because that's going to dictate also what's going to happen with taxes in the future, right? So, like I said, we had $7 trillion of money that government spent in 2020. So that means that taxes are probably going to go up. I know this information, so I know to prepare if it goes up to then put my money in pre-tax accounts. Okay. What are your thoughts on high yield savings account versus high yield CDs? I know this is inaccessible for the time frame of the CD, but the CD rate is higher, half and half. Keep 6 month expenses in savings and the rest in CDs. Marissa, it's not for me. This is my personal opinion. A CD yield is not high enough for me to justify locking up my money, especially since the only money I keep in my high yield savings account is my emergency fund. And that's basically a philosophy that I have that we can go over one-on-one if you want. But I only keep my emergency fund or something specific that I'm saving for, like a down payment on a house, etc., in those accounts. 100% of the rest of my money, once I reach that emergency fund, I'm investing 100, all of it. I don't invest a little bit of it. If I have 100 grand, I would invest 90 and keep 10. Versus what most people do is they try and keep 90 and invest 10. Just keep that in mind. Okay. And sorry, guys, I'm literally just going over the questions faster just because of time. So if it seems like I'm only half answering the question, I apologize. Once again, I would be more than happy to answer these questions in full detail one-on-one. Okay. It says I'm single income family W2 traveling with a spouse and one independent. I should LLC and claim and not claim standard deduction. So Cindy, the answer to that is if you can have enough itemized deductions that you have that are above 13,850, then you should itemize. If you have under that, just do the standard deduction. Okay. The average person usually just is able to do the standard deduction because they're not able to find enough expenses because they don't some people don't actually have a legitimate business. They just do the LLC for tax benefits, which is okay. But keep in mind what you can claim for business purposes. And of course, I'll explain that to you guys once again if we have time, because I do have the business thing I wanted to go over. But and if Brittany lets me go over on time, I will. But I'll let her be the judge of that. Let's see. Let me.
You guys let us know.
Yeah, I mean, I can go over. I technically work for 30 more minutes, so I'm perfectly okay with it. Let's see. I'm gonna keep going over the questions, and then I'm gonna go over the business stuff because I know you guys want to hear about LLCs and stuff like that because it's a very important topic. In 1 second, I think my laptop's not plugged in. Hold on 1 second. Okay, sorry about that. All right, so what is your opinion on using capital funds or Primerica for managing stocks? Betterment, which I was using through Trusted, keeps sending me messages that capital funds and Primerica have high fees. Publicly, I don't want to talk about other companies. You can reach out to me one-on-one. I'll tell you my opinion about them. But I don't want to talk about other companies. I definitely don't want to bash other companies or anything like that ever. That's not my goal. Sorry about that, Colleen. Let's see other questions. Nikki, what are examples of after-tax accounts? Oh, there's a lot. There's a lot, Nikki. Reach out to me. I'll go over like the whole detail. The whole detail. There's a lot. There's like over 10. Lauren, that's a really good question. We were going to go over that in the business section. She asked, can I make an LLC as a travel agent, or do I have to sell something or show profits and income? No, you do not have to show any profits. You can have a business that makes no money. Okay. I think I'm going to go over, it seems people want me to go longer, so I will. I want to go over this LLC and business stuff because I see a lot of the rest of the questions are based on the LLC. So I want to make sure, um, you guys get that information. Oh, Marissa, I see what you mean now. I see what you guys meant by tax home. My bad. Okay. I see now what you meant by that. Yeah, yeah. Okay, got it. Got it. Me knowing that information, if there's a tax home question, I probably can answer it better. I wasn't sure what you meant at the time. All right, I'm going to erase this stuff here. I want to go over the LLC. Well, actually, I don't know if I even need this. So I want to talk to you guys.
Can you stop sharing if you're not gonna share just because like everyone's stuff is like on it's like double showing us? Thanks.
Like this?
Yeah, that's fine if you don't have any slides.
Yeah, not right now.
Okay.
I'll go over the last slide with my contact information at the end. But yeah, for right now, I have no slides. And yeah, I guess it was probably showing you guys too. So what I want to do is just go over the whole LLC stuff. We don't really need to look at screens or anything like that. I want to just talk to you guys about how it goes. So when you have so first thing first, I'm a firm believer that all of you should have an LLC. All of you, 100% of you. Doesn't matter if you're W-2, 1099, you should have an LLC regardless. Okay. Reason why, and I get it, a lot of you guys are saying that even as a W-2, you've been finding standard deduction, you've been doing X, Y, and Z. Trust me, I was doing the same thing. Okay. But what's the purpose of deductions? It's deducting expenses. If you're doing a standard deduction with no business, that means there's no expenses to actually write off, right? You need a business to have expenses to write off. If you don't have the business, you're missing that whole piece. So a lot of people slide under the radar with a lot of things that has been told by different people in the tax accounting world. Okay. Second thing is, if you guys are making over $90,000 and you're doing your own taxes, please do not do them. A lot of people don't want to hear that. They think they're saving money. You guys are spending more money by doing your own taxes. Okay. The reason why is because a good tax professional, a good accountant, like a licensed accountant, which is what you would need. You don't need a CPA unless you actually have like a full transacting business. You just need an accountant. Okay. CPA, sure, it might help, especially if you're making money and you're doing an actual business. But if you're just doing this just get an accountant. It's also cheaper. Okay. But the accountant will help you with all that stuff. Okay. But you want to be able to say, hey, that's what I want to do. I'm going to write off these expenses. I want to pay an accountant to do it. Let's say it's $500, $1,000, $1,500. Ideally, they're going to save me more money than I pay them. So if they save me $5,000 and I pay them $1,500, I made $3,500. I didn't save money by doing taxes myself. I know how to do my own taxes pretty well, but they are still way better than me because that's all they do all day long. So I know you guys are asking me some questions specifically about like actual filing of taxes, some tax stuff. I'm answering them to the best of my ability, but remember, I don't file taxes. So there are some questions you guys are asking that are relevant to filing of the taxes, and I'm sorry I can't answer those just because I don't want to give you guys, bad information. But I would recommend an accountant if you make over 90 grand for all of you, okay? Because they can probably save you a pretty good bit. Next, once you start the LLC, a lot of people think that because you're a nurse or a travel nurse, that you have to start an LLC relevant to nursing. You don't. You can start an LLC relevant to whatever you think your tax write-offs are going to be. So I've had clients who would start a real estate business as an LLC because they want to write off what comes with real estate expenses. Or me, finance, right? So I can now write off what? This laptop. I can write off my phone, right? I can write off the table, this chair. I can write off my printer, right? I can write off my promotional materials and stuff like that. I can write all that stuff off because of the industry that I claimed, right? A fitness influencer, for example, I have clients who are fitness influencers. They can write off things like athletic clothing, barbells, dumbbells, gym equipment. They can write that stuff off as expenses, but I can't because I'm in finance. So whenever you build this business, you want to make sure it's relevant to what you think you're going to get the most deductions on based on what you purchase. I hope that makes sense because this needs to it needs to resonate with everybody that it's whatever you think you're going to have the most write-offs on that you should really do the business about. Okay. So if I know I want to get into real estate, I'm going to start my real estate LLC. Okay. I also can write off my mileage going to visit properties, right? I get like a $5,000 deduction a year on mileage alone. When I have meals, I'm gonna write some common deductions, hotel expenses or extended stay vacations, those kind of things. If you need those for whatever your business is that you're writing it off for, write it off. Especially things like hotels, your Ubers when you're on work, my Ubers when I'm on a work trip, or if I'm going to a business meeting, business lunches, business dinners. Okay. Now, here's something that a lot of people trip up on. If you're going to write off meals, because you can, if you're going to write off meals, you have to have at least 2 meals if you want to do this legally. Because is it a business meal if you really just bought one meal? If I bought one pasta, who am I doing business with? If the IRS audits you, they're going to ask you that question. Looks like here that you bought a pasta at Olive Garden. What business was conducted there? I, there's no way to prove you did business there. But if you have two pastas now, all of a sudden you can write it off because it looks like you may have done business with somebody. Okay. So keep that in mind. Same thing. If I have a hotel room or something like that, um, even if there's a client there and I'm not there for business, I can still technically write it off. Right? Air travel and transportation, write that off. I write off a lot of travel. Okay. So there's a lot of things like that that you can write off. If you do want to put your business in the nursing field, well, then guess what? You can start writing off things like your scrubs, if you're travel nurse, transportation, all that kind of stuff. So you want to think about your business. I have influencers who started influencing business because they like to do social media for content creation. They're writing off all kinds of stuff. Like you've seen those ring lights. They can write off the ring lights. They can write off their cameras. Like photographers too. You can write off your cameras, your video cameras. You can write off your microphones. You can write off that stuff. So I want you guys to think about LLCs or businesses that are going to be relevant to you and what you specifically end up spending more money on that you can justify as a business expense. Okay. My itemized deductions are pretty high every single year, but I'm finding things to do with it. Okay. There's also specific things that you can do with it. If you have an investment property, there's a lot you can do. You can do what's called bonus depreciation, which means you can write off a lot of the depreciated value of your property over 27 and a half years. And I can go over more details about that in a one-on-one conversation if you have an investment property. Karen, I'm going to answer your question just because I just saw it pop up. You can have as many LLCs as you want. I have 5 and an S corp. Okay. It takes me 30 to 45 minutes to build an LLC. It's really easy. Once you see how to do it, if you guys need help with that, just reach out to me. Once you see me do it, remember what I'm doing so you can then do it on your own whenever you want. That's what I recommend because I show people how to do it and what to do. That way you don't just have to pay again, because I think a lot of people out there like, yeah, I'll build you a business, pay me money, and then I'll do it for you. Well, if they do it for you, if you need another LLC, guess what? You got to go back and pay them money again. I make it simple. I show you one time, you do it for yourself, the rest. Don't do it. Don't let me do it more than once. I will show you how to do it. It's very easy. Jennifer said, how expensive is it to form an LLC? On average, it varies between state, but it's usually about $200 to $400 and then $50 a year to maintain it. That's it. Very cheap. Should each investment property have its own LLC? I've actually been asked this question a billion times. The answer is, all right, let me give you this. This is my personal opinion. I want you guys to hear this. The purpose of an investment property being in an LLC, I know you guys may have heard and I can say I hear this all the time. Instagram reels, TikToks, etc., that are giving me this advice. And I'm like, I don't know. It sounds good though. I don't know if that's true advice, but sounds good. You don't need an you don't need an LLC for every investment property. One, you can put the multiple under one LLC. And then 2, if you only have one investment property or 2 investment properties, you probably don't need that. Okay. It's really for liability reasons and why you would get the investment property on an LLC in the first place. That's why. That's the biggest reason is liability reasons, because if somebody in the property gets sued or something like that, you don't want them to come after you and your name. Okay. Now, if you have just one property, it's okay. 2 properties is still okay. But I say if you have 3 or more, you want to start putting your business, your properties under an LLC. Okay. And you can put multiple under the same LLC. If you have a investment property, but under 3, you should get what's called a personal liability umbrella policy. If you have an auto insurance guy, they probably do that for you. It does cost money, but it's way easier than building a whole LLC just for the property when you only have one, right? So I would recommend you guys um, just get the umbrella policy, which gives you extra liability protection, and it gives you $1 million of liability protection. If you only have one property, that's all you'll need. That's usually all you need, unless you're buying mansions. Okay. Uh, so Devin, that's a good question. Unfortunately, you cannot write off construction materials. Um, at least I've never been able to do it. So I'm going to say no. In your situation, you cannot write off construction materials and that kind of stuff, but you can write off things like furniture um, and other things that you have to buy, like appliances and those kind of things. Okay. All right. I'm going to go over the Q&As now. Let's see. Okay. I don't know if Heather's still here. She asked for my contact information. Sorry about that. I did not see this, Heather. If you're still here, I will give it here in a second. My contact information. Brittany will probably get it to you guys, I imagine. And you guys will probably have these slides. Okay. If my husband has an LLC and I don't as a traveler, do I still need one? It depends. Who's purchasing? Where are the expenses going under? Your name or your husband's? Okay. Also, I want you guys to know when it comes to your business expenses, make sure, and a lot of people make this mistake, and it's not the biggest mistake until you get audited. But make sure if you have a business expense that you want to write off and you want to start itemizing, that it's on a business debit or credit card. Do not put it on your personal. That's called intermingling funds. Don't do it. It sounds like not a big deal. Well, I've been doing it for years. Have you been audited? Because the day you get audited is when that matters. I just like to be safe. It's better safe than sorry. If you're going to have business expenses and things like that, make sure it is in the business name under a business credit card or debit card. Okay. Daniel said travel nurse could write off vehicles used for contracts and mileage. You can write off the mileage. You can't. Usually, you're not going to be able to write off the whole entire rental if you're going to like rent a car. Okay. But there are actual ways to do it. It's very strategic. We can talk about it, but it's not like a simple answer I can give like really quickly. Okay. Colleen said, how do I make money for my company if I don't charge fees? I'm going to answer this question, and then I'm going to give my contact information. Okay. So I'm actually a financial broker. What that means, I work for about 22 different financial institutions. Okay. So what that means is that I'm actually paid a compensation from those companies for opening, let's say, an account. Let's say it's a retirement account at ABC company. Well, what they do is they actually pay me a compensation for onboarding new clients. So I don't have to charge fees, win-win to you because you don't have to pay any fee. And then also I'm able to pay my bills. Okay. So that's how, hopefully that helps. All right, I'm going to share my screen one last time just to go over my contact information, and then I'll answer any final questions, and then I guess that'll be it. Okay. So let's see here. Should show my screen here in a second. I imagine you can see it now. All right. So here's my phone number. I'm still millennial, so you can actually text me. That's perfectly okay. Or you can call me. More than likely, if you call me, I'm probably in a meeting. So I will try to answer to the best of my ability. Just leave a voicemail and make sure you mention that you were in Trusted Health. So that way I know when to get back to you because I'm going to basically treat you guys with priority. So please reach out with that number. Like I said, you can also text. It's perfectly okay. And then we can set up a time to actually set up a call. You can also email me. If you email me, just put that you're with Trusted Health and you'd like a consultation. Very simple. Okay. If you want to follow me, here are my handles, right? So, you have your LinkedIn, Instagram. I think, like I said, that she will send you guys these slides, which probably will have this information. The most important information I'd say is the email and phone number. Don't hesitate to reach out. I would love to help you guys. And then last but not least, we have my website. Okay. I've been working with nurses for a long time. So we have our website here. You can go through here, see more about what we do. I have a whole team, right? So it's not just me. I have a whole team of people, and so we're here to help you guys with whatever it is that you guys need help with. Okay. Um, all right. 2 more minutes, I guess. Any final questions, I guess, before I move on? Okay, let me see if I get here.
We have a
And then
ton, so I'm not sure. But if you guys are still here, any of the people that are still here, if you want to do us a favor, if you have any last minute questions, please put them in the Q&A. I know that we may have missed some, but just put them in there if you guys have any remaining questions so then I can get to them and like answer them. They were coming in from everywhere. So we just want to make sure we get them all. If you have any last minute questions, because we're only going to take a few more minutes, just put them in the Q&A section there. Okay, guys? And everything, slides, recording, his information, everything will be in the email along with other resources as well. So do not fret. If you don't get it all right now, we will send that. Okay.
awesome. So I only see one more question in here. It looks like Marissa, how do you get a business credit card? This is the last question I'll answer because I don't see anything else here. But hopefully this was helpful for you guys. Like I said, my big thing is education. I'm all about educating people. I don't want to just give people answers. I like to explain why. Marissa, it is very easy to get a business credit card. Your first business credit card, this is what you should do. Very simple. You start the LLC, which means you'll have what's called an EIN. This is your business social security number. Okay. So you'll apply, and then you're basically going to apply using yourself as a personal guarantor. All this does is it says if your business defaults, that your credit is impacted. Why would you let the business default, right? So it's perfectly okay to do this. This makes it so easy to get a card for your business without any business credit, because business credit is a whole nother conversation, because that's the thing. You guys should start building business credit ASAP, especially if you guys eventually want to get into things like a business that's actually getting income, more real estate, stuff like that. Build the LLC now, build the business income, do that from the get go. And you need a business credit card to help you do that. So really easy to get a credit card. Just use yourself as a personal guarantor. And you'll one be building your business credit, but also you'll be able to have that business card so you can use it for business expenses. Okay, so once again, guys, I'm Shelby Green. Hopefully this was helpful for you guys. And yeah, I mean, I'll see you guys soon. And once again, don't hesitate to reach out. I'm more than happy to help everybody. And Brittany, thank you for having me here again.
Yeah, perfect. Thank you guys so much for coming today. Again, I'll send everything out. And then if you guys could do us a favor and also just fill out the survey. If you guys enjoyed this, we want to just know what you guys like and what you need. If you guys want to have Shelby back again, that's great. Just let us know. And please fill out the survey once we send that email that has the slides and everything in it and the resources and everything like that. And we hope you guys have a great, great, great rest of your week. Okay. Thank you guys so much for coming.
Bye, guys.